Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome to another incredible episode of Bullish and Beyond, where we are bullish about all things stocks, crypto, and life. But today we have some red in JT's crypto den, and it's because we're taking a hit right now. Crypto's down a bit. Stocks are really volatile today, really bouncing downward to the red side. And, JT and I were just talking about what to do in these scenarios. And, people need to take profits. So this is an opportunity that people saw. The stocks are running hot. They've been really, really hot lately, hitting like new highs in the market, like almost on a daily basis the last couple of weeks. It's been pretty wild, frankly. So people need to take profits. And JT had a great strategy on how to educate everyone on how to do that. The ladder strategy. JT, would you please school everyone on the ladder strategy?
For sure. So the concept is very similar to the entry strategy, which is dollar cost averaging. So instead of going in with periodic smaller amounts, you got 10 grand, you break that down into 2,500 buys, let's say, and then you just piece it in. The laddered exit strategy would be the same concept, but on exits, so on your way out. Before you buy anything, you should have an exit strategy. And honestly, a 10-year hold,
Most people probably don't. That's one of the problems.
Right. And a 10-year hold is a exit strategy, but you have to have one, right? Like I'm not touching this for 10 years. So it all depends on your strategy, but you should have one. And when I started managing LP money instead of my own personal money, I had come to the realization that I have a responsibility to these investors, as do all of the big money that move.
You are a fiduciary versus me being a personal investor. I'm like not accountable to anyone.
Exactly, right? And if I have a 400% return, I owe it to my investors to capture some of that, right? Even if I think it could be way higher 10 years from now, there's a responsibility. And
no one's mad at 400% returns. I mean, if your investors are mad.
Yeah, I only have 2 tokens that have pulled that, but Aave and XRP have been absolute monsters for my firm. And
Bitcoin's at 400% too for you, isn't it?
Yeah, about.
I thought maybe your dollar cost average is around 17 or something, 17K or something like that.
That's on my personal side. My personal side's crazy.
Okay.
Yeah, the fund, as you get new LPs in, which you're learning with your test account, right?
Yeah.
When you get new money in, you got to keep increasing your cost basis, which sucks. So
it makes the gains not look as good. Like my test account's up 25%, but I mean, some of my stocks, a lot of them are up 50%, and it's just that new money coming in knocks it back down.
Yeah, it does. It's a challenge that fund managers all go through. So my cost basis on Bitcoin is much higher on the fund side. So before I buy something, I'll do a great example. Aave. I started accumulating at $60. Before I hit buy, I had said that once it reaches its all-time high, whenever that is, I'm going to pull my principal plus 100% because that would be a 550% return. And it's already hit that. It's already hit that number before. So I was like, that's my first price target, right? And then after price discovery mode, every 200%, I will pull 30% of the position.
Okay.
Whatever that would be. And that's generally how I
always leave some in the run.
Yeah, because I'm long on this stuff. But in the short to midterm, I do think we're going to have opportunities like today where maybe my cost basis, I have an opportunity to reduce it, which is my goal as a long investor, right? If I know the name and I'm excited about it, you want your entry lower because longer term, your return would be higher.
Absolutely.
And taking those profits when you have the name go below your cost, you now have cash to reduce your cost basis and dollar cost average back in. So the whole concept is to keep your average entry at a modest level with new capital coming in and out. That way you can have a higher return. If you're investing monthly, you have the same issue as a fiduciary where you're putting money in every month, even if it's not other people's money. You have a 500 a week
Right.
here, a 401k set up monthly every 2 weeks,
Well,
whatever it
one
might
thing
be.
I struggle with is probably the same as other individuals that are putting monthly in on a weekly, monthly basis, is that I don't want to necessarily sell and trigger that short term gain. So like for me, I watched CoreWeave. I entered in the 90s and I watched it go up to 200 and now it's back down to 90 again and I'm basically break even. I
Right.
could have sold it a double. I could have pulled out half of it, my principal, but I didn't. And part
Yeah.
of that is that fear of the tax. And I don't know if there's any strategy to overcome that, or just we have to just literally forget about it and don't worry about the tax. But it's very cognizant that I don't want to pay tax on this stuff. And that's one of the reasons I don't. I'm a very, very long term investor. Most of the stuff that I buy, I'm going to hold literally forever, even though I kind of I sometimes can see the cycle of like, oh, I should have sold some and I'm watching it go up and down. I know it's gonna be longer in the end, but I could have sold some and bought back cheaper in this case. So I'm missing some of that opportunity to dollar cost average at a lower basis while locking in some profits on the high end.
100%. To answer the first part of that, the taxes, there are a few strategies. All of them can be summarized over the concept of a wash trade, which is essentially you balance your tax liabilities with other potential losses. So if you have a diversified portfolio, for example, my fund, 80% of my tokens are in profit, but I have six names that are in the red, anywhere from
Yep.
15 to 30%. I could take profits from XRP, right? Because that's a huge return right now,
Oh
and
yeah.
then sell my loser and offset the taxes. So you're intentionally playing around it.
Yep.
Another
I
another
tried that.
thing you could,
Unfortunately, I used ETH and I sold my ETH before it went on this monster
yeah,
run.
yeah,
It was down
yeah, and that
15%. I'm like, oh, I need a lock. I got some gains I was selling. I was selling a few Apple shares to buy some more Nvidia, and then sold my ETH at a small loss.
yeah, yeah. It's a hard game. So like again, in my mind, you have to really decide what kind of investor you are. Like I am a long-term investor. My exit strategy is exit in 10 years, like generally. But
Okay.
the I feel like the goal as a professional fund manager is to optimize a portfolio and reduce risk and all of that stuff. So your hands are
That's your
kind of
job,
tied
literally.
to, yeah, like your hands are kind of tied to that operative, if you will.
Yeah.
Um,
But most people
but
listening to this are, individuals, like myself. So I think that
yeah,
we need to figure out how to be better around some of this market timing. So I think most people are not capturing those gains and selling their losers to offset it. I like that.
here's
I like that
another
strategy in
concept.
general.
Yeah, here's another concept. I do this in the fund to avoid taxes. If I have new LPs coming in, some of that new LP capital will be my profit taking. So if I were to allocate a full 100,000 that came in last month and I have over 80K of unrealized profit, I'll put 20 in a high yield, 5% account and then
Yep.
it deploy 80 and keep that 20 as profits. So that way I don't incur tax liabilities
You
on
don't
the
have to
fund
sell
side.
it. Yep.
Right. And then the same could apply to anyone else. If you're making an income monthly and you were going to invest, but you see that you're at, 100% returns or something crazy, and you want to capture some of that profit, you also could leave it in there, keep that cash on the side, and wait for a price target that gets your cost basis lower or the same and accumulate at the same amount. That is another way to
Yeah, it
do
makes
that.
sense.
So you avoid the taxes. And, in general, what I think that teaches people as well is to be patient. Like just a week ago,
We don't have any
you would have
patience in
bought,
this world. I'm not
no,
patient. at all.
Just a week ago, Bitcoin was at 125K. If you were FOMOing in, you're down 6%. Where like if you would have just waited a
Michael
week,
Saylor was probably still buying it. He doesn't care. He
right? He
literally
doesn't
says
care.
he's not patient. He's like, funds
Yeah.
come in, I buy Bitcoin. I don't care about the price. And
Hmm.
he has a different strategy. If you're buying that many coins, it's a
Yeah.
little different. But I think we do need patience. That's a really good call out because if you keep that cash in the sideline to deploy it at the right price, you can do much better in the long term. The FOMO is really the issue that I think myself and every other individual investor probably deals with. I mean, we want these short term alpha gains. People got bills to pay. They're not trying to wait till the end of the year to make their cash. They want it tomorrow, today, now.
100%. And if you could switch the optic to when, not if, when things go awry, even if it is 2, 4%, whatever it is, in the stocks or 10% in crypto, you actually feel good because you now have options.
Yep.
Like if a bear is trying to eat you and you just shot all your bullets in the air 5 minutes ago,
Whew.
you know,
Gotta
and
save
you're
one slug.
pointing an empty, yeah, like, it's the same
That's a
thing. Like,
great scenario.
yeah, you hold some ammo. Get ready to shoot that thing before it eats you. And I think
There's
people
been
are
many a day
just,
in a big market drop where I wish I had some cash on the sideline ready to deploy. I feel you.
yeah. And if you're worried about inflation and all that stuff, the hurdle rate is 8%. If you're investing in any of the names we talk about or crypto or anything else, that's a year, by the way, right? So, I mean, it's less than 1% a month.
Yep.
So you could make that if you would have just bought at the right, a 5% decline, you might have gotten a 20% bump. Because what these things are doing is they go up, they crash, they find a channel, and then they go up, then they crash, and they find it, and it's always higher. It's always higher, just ledges. So I mean, in your example that started this
The stocks
conversation,
that we
90 to
pick always go
210.
higher, right?
Yeah. I mean, we've been doing pretty good,
Oh yeah,
right?
killing it.
90 to 210 back down to 90. If you would have, let's say in that period of time, it's a year, and month 7 it went up to 210. Let's say for 2 months you kept your amount to the side. Let's say it's 10,000 total. You were doing 5K a month in all of your investments.
Okay.
So now you have 10,000 on the side and it goes back down to 90. You chose to take some profit on the way up by not investing. And then it goes back down to 90. You now
Would have
have
loved it.
what 10,000 more shares, I'm sorry, $10,000 worth of more shares at the same cost basis. So when your long-term thesis plays out, your returns would be higher.
Double.
You have more units. Yeah.
Oh yeah.
So, and you would have only lost or risked, let's say 7 months times zero point 0.7, right? Like literally
It's
2.1%
impossible to
inflation.
time those highs and lows though. So like right now, it's like,
Right.
well, could it go lower? Well, certainly it's not
Sure.
even profitable business, but the potential is
Sure.
insane, which is why it's up so much.
Right.
So I think we
That's
need
why
to,
we dollar
yeah, you got
cost
to ladder
average.
in. Yep.
So if you have that 10 grand,
We're
split
teaching
it up into
smart
four
investing, not
investments.
FOMO investing here, guys.
Yeah, exactly. Yeah. So now you got 10K and you got four 2,500 investments. It goes down to 90, throw one in. Goes down to
Yep.
88, throw two in. It goes up to 93, throw your third in. Maybe you
Yep.
sit on the last one and then it goes back to 205, then it comes back to 105. There's your last one, right? And letting the market just do its thing and calmly making the best decisions with the information in front of you. Aping every month is aggressive, but there
Staying
are
calm is
optimal.
key and hard to do. I think
Yeah,
writing down the thesis ahead of time I think is really crucial. I have it in my head a lot of times, but I'm so bullish that
yeah,
the numbers might not even make sense to anyone else. And I am going long term, so it doesn't really matter what the exact number is. Like I'm not even trying to sell it. I'm not even looking for that exit point. but I think that I do need to be more cognizant of some exit points along the way.
Maybe it's just sketching it out and seeing
Yeah.
how realistic it is, and then going back when the market's at all time highs, and you're excited. You have that Excel sheet of your price targets. Just see how far off you are, and it's like, just feel it out. Was I good? Was I bad? Should I take profit? Should I not?
Yeah.
Maybe start the
Well,
analysis, and if
going
you
back to the
do,
core weave, if the stock I picked doubles, in a month or two, it's like, probably take a little off the table.
yeah. Or just not invest, right? Like if you're pulling money in every month, just keep a little to the side as profit in your situation if you don't want to worry about the
Yeah.
taxes. If you had an amount that you were thinking,
I want to keep
yeah, I want to
investing
buy
it.
more. Yeah, I want more. Like,
My goal in life is just to get more money in the market. Let the money work for me.
that's right. I mean, dollars are employees. They need a job.
Well, soon we're gonna
That's
have
weird.
agents running those dollars.
Yeah, little
Oh
automated
yeah,
managers. It's going to be pretty
I'm
neat.
excited. I have a whole investment team under me, and
Yeah.
it's probably only a year or two away.
And everything that we talk about wins in that scenario. Like everything. Nvidia, TSMC.
I mean, the demand for Nvidia that I'm seeing could be 100x before the end of the decade. So 5 years, 100x demand. Of course, they don't win all that business. I mean, they might not even be able even to pull it off if they wanted to. AMD is another big chip player. Broadcom. There's other players in the mix here, but Nvidia is still the juggernaut. So I mean, if they capture even 50% of that, that'd be a 50x revenue. I mean, the stock has to go up.
Has to.
I
Some
mean,
arbitrary number, but yeah, let's run it. It's going up,
insane.
but it's impossible to envision a $200 trillion company.
Yeah, I mean, I'm not there right now, but I mean, in the future, I mean, we talked about the money supply always going up, so the amount of money these companies are worth will like be technically less. So a company that's worth, Nvidia being the $4 trillion company it is, you keep printing the money, that might be the equivalent of a $2 trillion company today in a few years. So eventually, when it's at 10 trillion, maybe that's only a $6 or $7 trillion, today's money value.
Yeah, Trueflation has a great thing for that, like market caps by inflation set back to a certain period of time. Super interesting.
Oh, that's the
Um,
website,
Trueflation. Yeah.
trueflation.com.
Yeah, it's a data site that basically accounts for dollars in real value, and it gives you
Interesting.
time ranges and things. It's also where you go if you want actual CPI and PPI numbers compared to the government's version. So this is
Oh,
like
really
where a
cool.
lot of
We're gonna put this in the show notes because this is super interesting, and I've never even been on
yeah,
that site before. So how come
yeah,
they have different CPI numbers than what the White House is putting out?
because the government conveniently doesn't include certain things that would affect inflation through a bunch of different
Oh,
arbitrary definitions of what actually inflation is. So back
is
in
inflation
the
higher
mid,
or less? It's probably higher than the government's saying. Is that fair to say?
yeah, yeah, for sure, almost always. They exclude certain sectors in energy, certain sectors in healthcare, certain sectors in food and production, where Trueflation does not exclude any data. Um,
Got it.
they're usually 50 to 100 bips off one way or the other, the government is, from Trueflation. So macro analysts go to Trueflation for, the uncensored data. Um, and
And why would the government try to hide what the true numbers are?
I mean, whatever helps them out, I guess. Like right now, Trump does not want high inflation numbers because the likelihood that Powell cuts is lower.
Once that cut. The market,
So
speaking of cuts, the market is pricing in like virtually a guaranteed cut in September, even though there is some conflicting data. Oh my God, inflation went up 0.9% this last month. Hold on to your
yeah.
pants.
And this is exactly what I've been talking about. What we talk about on this show. The Powell is saving his ammunition. Let's go back to the bear analogy. Powell only has 425 basis points. He's got 425 rounds that he can use to
Yeah.
stimulate the economy. That's it. If you go to zero, meaning he cuts rates down to zero, and the economy is in the shitter, we are in a stagflationary state similar to Japan, which has spent 60 years and has not recovered from.
We do not want that.
We do not want that. So Powell's job is just to react to the market. He's not going to do anything until he sees that's their job, is to react. They don't proactively do anything to avoid Japan's mistake.
Okay.
Every central bank learned that from the 80s. Japan was kind of ground zero.
Devil's
So,
advocate here. It feels like they could have cut a quarter point. Like that's not going to
yeah.
upend the market. I mean, I get, if you were cutting a quarter point, 5, 6, months in a row, very big deal. But I feel like the market was just screaming for the rate cut. And I get, the market doesn't determine, what happens with monetary policy, and neither does the president. But it seems like we're maybe ready for that tiny cut. See what happens.
Maybe. I mean, dude, there could be a situation where he increases the rate. To be honest, like if you go to Polymarket right now, when I had said that, it was at an 8% chance. It is now up to 26% chance.
Of no
So
cut
like of
or
a
cut?
increase.
What? What,
Yeah.
just since this last inflation print?
The inflation print, and honestly, I think a lot of people are seeing what I'm seeing. Like Powell is going through the most embarrassing career that you could have. Trump literally took him to the Fed building under construction and interviewed him on live television, and they were asking him questions, and he was talking how bad Powell was at managing money in front of Powell in the building that he is over budget and over time on.
And he could do
He is
nothing
just
about it.
he can do nothing about it. Trump is just cramming it into him. He is
Oh
torturing
my.
Powell, and Powell is standing firm. Why? And it's because Powell is worried about all of Trump's policies. You have a lot of what we thought was going to be
When the policies
deflation
change
within.
so quickly, I mean, one day there's no inflation on chips, the next day it's 100%, next day it's 200%. I mean, you literally just don't know. I think
It's
that's the
because
problem. If there was clarity, he might be able to make the cut.
the big beautiful bill is what is causing that lack of clarity. He had 2 years of deflationary fiscal policy domestically that he destroyed with one bill. And Powell, the only thing Powell would have cut on, in my opinion, is actual like we are going to reduce the fiscal budget. We're going to run at a surplus, all this stuff. And we actually had 1 month in a surplus, 79 billion. All of that. And then the big beautiful bill
1 month in the
happens.
last, couple of decades.
Right. And then the big beautiful bill prints $4 trillion, and that on top of the tariffs, that is causing Powell to be concerned, in my opinion. And
Yeah.
we're starting to see that come out. The PPI came out 10 bips higher than anticipated, CPI up 90 bips more than anticipated. And it's
Yep.
only really the second month after the announcement of the big beautiful bill. So we haven't even released all the capital. Just what? I think 100 billion of that 4 trillion's out there. Powell has a serious reason to be worried. And I don't know. He might increase
More
rates.
inflation to come, probably
Yeah, and we're
likely.
S&P 500's at an all-time high,
And
and he
so
wants to cut it.
that's the reasons
Like,
you don't cut rates. And I follow this guy Cody Willard, huge investor, he runs a hedge fund now, and has done it for many years. And he was saying like he actually would recommend the raising of the rates because the market's so hot. And he says, I mean, just like we're talking about, you only cut rates to stimulate the economy, and clearly doesn't need stimulating, or why would it be peaking?
yeah, it's like shooting a gun in the air in the middle of Alaska. It makes no sense. Wait for a predator.
Yeah.
They react. The Fed reacts. Trump wants the Fed to be proactive because he's like, we're going to grow, 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 grow. My plan won't work unless we get people investing in America. We need debt to be cheaper. Da 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 da. And Pal's sitting here thinking like, dude, I still don't know what you're doing with the economy. I'm not
Right.
doing anything until I have signs that what you're doing and saying align with the economic data. And right now, that just isn't the case. And he is firm in his resolve.
And I wonder
So,
if they did cut. I mean, would it stimulate any other business growth? I mean, the mega scalers, you know, Meta, Google, Amazon, Microsoft. I mean, their capex is so high. Like, would they actually do more? Like, it's almost hard to
I don't
believe
think
that there's
so.
another scenario where they invest an additional 10 billion each quarter just because there's a 25 or 50 basis point rate cut. Like, I think
I
their
don't think
plan
it,
is kind of
yeah,
locked in regardless.
I totally agree. I don't think it would change any of their plans. All this debt they're taking against their balance sheet, that's
Yeah.
going to be refinanced at lower rates. It just will. And they're just gambling that inside of the next 3 to 5 years, rates will be lower. And I think that's a safe gamble. Unless we enter some crazy Volcker level inflation with Trump's changes and we have to raise rates and guys, you need to go look at this. I'm being serious. 13% back in the 80s. Mortgages were
Yeah,
18, 19%.
back when our parents were buying homes, I mean, they were paying 13 to 17% or something like that. And that's almost
Yeah.
and that doesn't even
Hasn't
comprehend in
happened
my
since.
brain that that's even possible. Like I don't think I'd
Yeah.
want to buy a house if I was paying 15%. I'd be like, I'm just going to rent.
Well,
I mean,
imagine
rent goes up
CPI.
too. I mean, but
Yeah, 100%. If CPI hits double digits, right, that's where it was at in the 80s. You got to be really worried, right? Like you got to keep that money under control, keep it in the smart hands. So,
all right, I'm super
uh,
bullish, so I'm not going there. But I
okay,
know
yeah,
it's
this
always
is bullish
possible.
and beyond. Yeah, 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 100%. I am so bullish. I look for these things so I can get like some of the best decisions I've ever made is buying down there.
Yep.
Like if you would have bought any real estate in '09, you could have been Stevie
Killed
Wonder.
it.
Yeah, you could have been blind. If you were just able to keep the property, do nothing, just hold on to it, you'd kill it. Any real estate.
If you
Even
bought
I
down
mean
in
outside
South
of
Florida, God, Miami, Fort Lauderdale, I mean,
it not matter
murdering
what
it.
you bought.
Yeah,
The
you'd be up
lot that it's
20x.
on, yeah, yeah, like the lot is worth more than the house now that you would have bought back then. So like
I mean, one
there's
of
some
our
of the
friends bought a condo in Miami. Adam Kohler, who's one of our guests on the
yeah,
podcast.
that's right.
You
That's
know,
right.
I think he's up, 300 plus percent or something like that, and he
Crazy.
bought it 5 or 6 years ago. That's just one example of one unit. So you buy the
And
building, woo.
crazy money. And that's actually a
Yeah,
really cool opportunity he did where you have these people that raise money for a building before it's built.
pre-construction.
So pre-construction, that's right. And it was crazy. He told me he put a 50K deposit down. His total principal's 250. It's owed over the next like 24 months. At the end of those 24 months, he was fully invested. They had the condo made and that 250 turned into 510. And then they actually Airbnb it when you don't use it for you. They
Yep.
take a 10% fee off the top, and he is cash flowing almost 18% a year on his 510, which he only put 250 in. So really, his cash on cash return in 3 years is over 80%. It's insanity.
And that kind of is probably worth 1 million now.
Yeah, I was about to say that was the report I got in 2024. It's almost 26. It's
Yes.
it's probably worth, yeah, like you said,
The
three seven fifty.
market's still
Yeah,
going up down here. I mean, there's certainly some price compression. You can't sell a home like you did during, the middle of COVID for some stupid number of no contingencies. But no, it's pretty crazy. I've been watching home prices and stuff like that. I'm going to be getting into my realtor work here in the near future. So excited to help people, buy and
that's
sell some
awesome.
homes in South Florida.
That's awesome, brother. I'll be getting one from you someday.
Yeah,
Love it
man.
down there. It's gorgeous. It's something else. You got a nice setup there.
Always
I
sunny.
watching the real estate market. This is the first time in history, recorded history. where new homes are actually cheaper than existing homes. And
Really?
I think, yeah, and I think that's a result of the soaring inventory. I don't know if you watched that, but we went from 40,000 available homes like listed across the country to almost 500,000 in the past 2 years.
Wow.
So,
I've seen some new construction prices, come down a lot from where they started.
yeah.
Yeah.
Yeah, and the reality is I think we're going to have a pullback in some markets. The top 50 markets are actually negative anywhere from, 10 basis points to a few hundred,
I know over on the West
which
Coast,
isn't
there's a lot,
extreme.
lot, lot of that.
Yeah, there's not as much demand. Who wants to move to California? People are leaving California. They're not, there's not as much demand, going into California. And I would say the same as New York. Florida is benefiting massively, no different than Texas, from those policies that are pushing
Yep.
people out of those states.
The
Um,
same reason we're buying stocks to go up. Stocks go up on demand. Same with crypto. I mean, it's the housing market's the same way. If there's high demand in, Miami and Fort Lauderdale, prices are going to go up. Man, people moving down here by the droves from New York or coming over from Cali. Half the people I meet are
yeah.
from New York and Cali.
Yeah. I mean, they also have a different. They're like, I paid 1.2 million for an 1,800 square foot ranch. Like, I'll pay 1.5 for a mansion. Why not? Like, they just have a different. They're so used to debt
Yes.
and crazy living, so they come in here and blow our markets up. Because they'll just offer 100 over asking to get it done with. They're like, this is still way cheaper, way better than anything I've seen. So I'm just going to, throw the bank at it where the locals are at a serious
And you have to get in it
disadvantage.
sometime. You can't dollar cost average into your house. So you got to pull the trigger.
Yeah, you got to time that one, unfortunately. Maybe that'll change with blockchain. That could be another episode. Fractional real estate. That's a real thing.
Ooh, I like
Um,
that.
yeah, it's pretty
Austin
neat.
Allison's getting into some of that from what I've seen. Picasso, you get
I was gonna
you
say,
get like
yeah.
an eighth of an ownership. Sharing your house with other people though, I get it. If it's a vacation home, different type of lifestyle. You're just gonna use it for a week or two at a time. Um,
Yeah.
but I don't think I do
Airbnb.
that well for sharing my home.
Yeah, yeah, yeah. It's hard for entrepreneurs, but for the average Joe that wants some exposure to Fort Lauderdale and they
Yeah,
can get exposure for $1,000, like that's interesting,
I
right?
love that concept. If you can just tokenize your home, I mean that's
Yeah,
awesome. You might, I mean, in the not too distant future, you might be able to buy a home and only like basically put your down payment, have everyone else, paying into it with crypto, and they're going to get the upside on it in the future, and you won't. But hey, your expenses are basically gone.
right. That and like every time if you wanted the equity back, you could just buy the tokens. Like you could have it automated through smart contracts, but what if you got a bunch of people to support a mortgage for the income on the other side? They're like, okay, I'll put 5,000 in to make $100 a month for the next 30 years.
Yeah,
Right? And then that all gets pooled, and then every month you pay, it gets distributed, and they buy a little bit of those tokens from you. So then you could actually have peer-to-peer mortgages in that scenario.
I think there's
Um,
a company that's doing that. We need to dive into this in another episode because this is hyper
yeah, yeah,
interesting,
yeah,
and
yeah. It's
that
super
could be
cool.
the future of real estate. Like, I mean,
It
first
could
of
be.
all, the paperwork to go through a real estate transaction is abominable. So
Yeah,
that needs to change with blockchain. But just the ownership, how it's going to work. I mean, I think that's going to be awesome in the future if we can do that.
it will be. I mean, right now through Aave, it takes 2 minutes to get a 65% LTV loan on Ethereum at
Wow.
2 points over Fed fund rate. So I mean, you can get 7%, 65% LTV on your Ethereum in 2 minutes on Aave. So there's no sense if you can prove ownership of the property, you have the equity from the county, right, from their
Yep.
assessment, and that's all on chain. There is no reason why you can't go get a loan on it and get a line of credit and have it all set up. I mean, there are people with a lot of liquidity that would love to have rights to a home and get paid every month. You know,
Super cool. All right, we're going to
I would
dive
love to
into
do
that in a
something
later
like that.
episode. I hope everyone had a lot of great takeaways today from our ladder up and ladder out strategy. And if you deploy that, you can lock in some gains just like JT, our professional investor here. So more to come. Stay bullish. Keep your head up in this down market. Find those entry points and crush it, everyone. Cheers.
See you, buddy.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.